So is a quick summary of how to pay Chinese suppliers by TT payment. So let's start off by looking at what a TT payment is. So it's a telegraphic transfer or wire transfer of funds between banks, and it uses the SWIFT system. It's pretty normal for Chinese suppliers to request this kind of payment. It's also good to know that you can use a TT payment to send a different kind of currency. So if your supplier asks for US dollars, you can do that. Also common to send RMB. So what do we need to know about TT payments? Well, they're pretty safe, which is good. It's a well-established system, and SWIFT is a global network of banks that talk to each other. There may be fees to pay. We'll go on to that in a minute. And payments usually take around 3 to 5 working days to clear. So yeah, fees, not good news, but it's pretty normal to pay fees for business banking. When you do a SWIFT payment, it may well incur fees as well. The fees that you're likely to pay can vary, but they'll include a charge by your bank, charges by banks within the system, a charge by your supplier's bank that's receiving the money, and if you are sending a different currency, there might be a markup on the exchange rate to pay too. Typically the fees aren't huge, but you're looking at around between 25 to 50 US dollars per payment. So now we know what a TT payment is. How do you actually make one? Well, luckily these days most banks allow you to make them online. There'll be an online form and you need to fill it in with the exact information that they're requesting. This will usually include the recipient name, so that's your supplier, their bank details including the IBAN, BIC or SWIFT code, their address, and also their bank address. It's also going to include, of course, the amount that you're sending. Once you're good to go, send that, save a transaction record, and then send that to your supplier. Then they'll know that their payment is on the way and they will be happy to start production and nothing will be held up. A couple of other points. Be careful to double check for typos, because if there are any, the payment will be held up. The same goes for getting the Chinese company name right, because these can be very, very long. So make sure that they're written in full and in English. If you need to go on another line, you should be able to do that. Perhaps seeing a TT payment get filled out will be helpful. So if you want to look at an example, you can use this link and go watch that on YouTube. So if you're ready to make payments, you might also be wondering about payment terms. As an importer, the more you can pay after the shipment, the more favourable and secure that payment term is to you. Some big buyers might pay by letter of credit, or they might pay 100% in arrears. Of course, small and medium enterprises might not be able to get such favourable terms from their suppliers. We've written another post about payment terms. You can follow this link and also go check that out. A very typical payment term looks something like this. There's a 30-70 split where you pay a 30% deposit and then 70% final payment after the goods have passed a QC inspection. Usually what's going to happen is, once you're content that your supplier knows what they're doing and is able to actually produce your goods, then you send them the 30% deposit before they start production. They'll buy what they need and get everything sorted for production and then start actually doing your mass production run. It's a good idea to do a QC inspection, and then once you've actually got your QC inspection report back and everything's fine, then you send the remaining balance payment before your goods get shipped. Finally, the supplier will send your goods and then also give you the documents like the bill of lading by express courier. But there is a better term that you might try to negotiate. It's very similar, and that looks a little bit like this. Again, it's a 30-70 split, but on this occasion, it's a little bit more secure for importers because you don't make the final payment until your goods have actually been shipped. At the end of the process, once you're happy that quality is okay, the supplier will release the goods, and then once the goods are on the ship, the supplier will be given the bill of lading. They send you a copy of this, and if everything's okay with that, you make the final 70% balance payment. By this point, your goods are on the ship, on their way to you. Once your supplier receives the payment, they send you the original bill of lading that you need to take possession of your goods by express courier. Everybody's happy because you know your goods are on the way before you make the final payment, and your supplier knows that they can withhold the bill of lading if you don't pay them. So how do we negotiate better payment terms? Well, usually there are 3 scenarios that will allow you to negotiate better terms. So the first one is if your company is well established and famous. In this case, your supplier will see you as less of a risk, and they'll want to work with a famous client. The second is if you arrange the financing of suppliers. So if you are a very big buyer, say you're purchasing more than around $1 million a year, you might be able to work with a company or bank specializing in trade assurance solutions. In this case, your supplier will be paid when they need it, but your account is actually debited much later. And the third scenario is if you have a buying office in China yourself. Having an in-country presence will help your supplier to feel that they can have a personal relationship with you, and if any issues do occur with payment, they can come into the office and sort that out. Over at Sofeast, we're local, and in our experience, when we help our clients pay their suppliers, we can often negotiate a 0% deposit and 100% after shipment at the end of the month. So we'll just finish off with some FAQs about TT payments. Perhaps common sense this one, don't prepay 100% of the order before production starts, and also don't wire a down payment before you are sure that the supplier knows what to do and is able to produce your goods. Are there any scams to look out for? Yeah, there can be. So some scanners can send fake invoices which look exactly like invoices you've got from your client, but they've perhaps got different bank details. It's really important to very carefully check any new documentation against real information that you know to be true before you wire any payments. Can a supplier receive a lower amount than is actually wired? Yes, because in this case, probably the transfer fees got deducted from the final payment. As the person that's paying, you need to choose to pay all of the fees. Otherwise, your supplier might be awkward and hold up production. A few more FAQs here. So if your supplier asks you to wire a payment to their personal account, is this okay? In general, you should be demanding an invoice from your supplier's company and then paying that company. It might be okay to send a payment to the boss's personal account for perhaps a very small amount of money, a couple of $100, but then you won't have an invoice. If your supplier wants you to send the payment to a different company, this sounds like it might be a scam, but actually it's probably not. A lot of Chinese companies often use a Hong Kong company to avoid needing to declare sales in China and therefore reduce their tax. Perhaps they've got another company that actually holds an export license for your goods, or perhaps it's normal for them to collect payments and do all export procedures under another company. If this is the case, it's fine, but in order to be safe, it's good to get both companies to sign and stamp a joint declaration acknowledging that Company B collects your payment on behalf of Company A.